Hello, everyone. Welcome back to another episode of 401 Access Denied. We've got a really exciting, really interesting topic today to discuss. And I think for many companies out there, it's really going to be something that you're either in the middle of doing or it's something you're going to have to do in the near future. So exciting topic. I'm one of your co-hosts, Joe Carson, Chief Security Scientist at Thycotic, and also advisory CISO for Thycotic and in many companies around the world. I'm kind of like almost an ear to many CISOs thought process. It's a pleasure to be here. And I'm joined with Mike, my co-host. Mike, do you want to give us an update and interesting about what the topic is going to be about?
Yeah, Mike Rowan, VP of Engineering and CISO here at Cybrary. Today's topic is about cybersecurity insurance. And we're joined by two great guests, Kevin and Michael. I'll let them introduce themselves and maybe one of them will tell you a little bit about their company and what they do. Kevin, why don't you go first?
Sure. Thanks, guys. Hi, Kevin McGowan. I am Vice President of Underwriting with Resilience. I sit in Chicago. So here at Resilience, we are underwriting cyber insurance on a daily basis. And we also have some pretty interesting security offerings that we're bringing to the table. And with that, I will pass it to my colleague, Michael, to introduce himself.
Thanks, Kevin. My name is Michael Phillips, and I'm Resilience's head of claims. So I'm an insurance lawyer. So hold your booze. They only make me stronger. But what I do is I make sure that Kevin's promises are fulfilled when a cyber crisis hits. And I try to help companies respond to the incidents that happen and maximize their insurance on the other side.
Great. Well, welcome. Thank you so much for joining us.
Absolutely. So it's a pleasure to have you here and really excited about today's conversation. I think it's an important topic for many companies because it's a way, it's one of the several ways to offset risk. Which is important for organizations. So I'd like to get kind of some of your input. I've been kind of touching the insurance industry for quite some time. Around 2008, 2009, I got heavily involved in the maritime sector. And it was a time when in maritime, they were getting, I guess the old type of, real world ransomware type of thing when they were becoming, pirates were attacking vessels. And what was interesting at the time was insurance was a big discussion for the shipping industry. And they had lots of different insurance policies. And one of the things was that we started to see, ships being, and ship management companies and the industry being targeted by cyber attacks at that point in time. But interestingly enough, the cyber insurance portion actually was under the terrorism portion of the insurance law. And it actually excluded them from getting insurance for cyber side. So I'm just interested from your side, and then of course, in the years after that, we saw a lot of major attacks. And I started seeing the likes of cyber captives being a kind of shortcut because there was nothing really to cover that cyber side of things. So just interested to get your kind of feedback into how has cyber insurance progressed since those times where one is, companies couldn't get it, wasn't available. And then companies moved to doing cyber captives. What's the current situation today with cyber insurance? What's the offerings and how has it progressed over the years?
Michael, why don't you kick off? I can provide some comments.
That's a great question. And, what is cyber insurance? Even in 2021, we're still having to address that question. If you rewind the clock 30 years or so, the initial cyber-ish insurance policies were liability policies sold to tech companies. If you were breached and you lost data or your technology failed to protect your client firm, you may be sued and you may have liability and you might want insurance to transfer some of that risk. But over the years, this policy, this side of the industry has iterated to expand to a lot more coverages. One thing that I think is really important to highlight, and your question gives me the opportunity to do so, is what truly is cyber insurance versus other types of insurance that might try to address some aspect of computer-based risk is a really important one, and it's one the industry wrestles with every day. So at Resilience, and I'll tee it up for Kevin to comment on, we are champions of the standalone and affirmative cyber insurance marketplace. So that's the most technical version of what I mean to say, which is we develop products that are cyber only, that have cyber on the tin, that everything they say is about the perils of computer security and the like. So a lot of the public reporting to this day about cyber insurance tends to reflect these other markets, these traditional markets, and there is no market more traditional to insurance than marine risk, trying to address computer-based risks for their spaces, as compared to where Kevin and I try to develop expertise, which is this standalone space where everything we do has to do with this risk.
So on that real quick, I'm curious because there is a point where physical stuff and cyber overlap, and like, how do you draw those lines? Like, if I have a physical data center and there's a physical breach, like is that covered by cyber? Like, where do those boundaries, and how do you guys sort of think about that?
Well, that's great. I'm gonna take that one too, and then I'm gonna take all the tough ones because you're asking all the tough ones right away. So that question also speaks to another thing that the cyber insurance industry, or the industry at large, is talking about every day. We call it the silent cyber problem. So most of the physical, tangible property risks in the world sit with property policies and with other types of commercial insurance policies that say if physical property is stolen or destroyed, we'll replace it. And meanwhile, cyber insurance, our sector, we've always focused on intangible risks. And now you are seeing, just as the technology is moving in this direction where internet connected things are manipulating physical objects or have the ability to do so, cyber insurers trying to figure out what more can they cover, how do they underwrite to it, while property underwriters are saying, you know what, I'm getting burned. I don't know about this. I don't know cybersecurity well enough. I don't know about data privacy well enough and the consequences of these events. So I don't want to cover that anymore. And so that's where we're seeing a bit of intersection and divergence. And so different underwriters are taking different strategies on that.
That's really interesting because your point, one of the things I'm used to from insurance policy looking at, in the past, it was always about, let's say, they had a leak or a fault in the data center, which caused physical damage to the servers. And the insurance policy would have covered them for the cost of the equipment, but the data itself, they were not covered. That data itself was basically, not considered a tangible value asset. What's really interesting from you're coming from the opposite side is that looking at from the data perspective and really focusing on organizations. So really giving that gap of what they couldn't do in the past, so they could have the traditional types of policies that would cover them for the physical assets to be able to restore and get back up and running. But for many businesses, they rely on the data. So how would this work? And for example, because what I see from a data tangible perspective that most organizations get faced with is the likes of ransomware. And we had a recent episode discussing about organizations who do become victims of ransomware because that targets the data. That really targets the availability of the data. It stops the business from providing services. In many cases, if it impacts their backups, they're in a situation where they struggle to even recover. So is that kind of your type of customer base you're focusing on, purely in the data perspective?
Yeah, that's exactly right. That kind of ties together some of the topics you guys were just talking about in terms of where are the lines, what is the intent of a standalone cyber insurance product, and sort of the difference between tangible versus intangible property versus data. And if you think about how insurance policies work, it all goes back to the triggers. So on a property policy, you're talking about physical events like fires and hurricanes. And on a cyber policy, and like what we offer at Resilience, you're talking about what we'll broadly call security breaches, security events, data breaches, privacy events. And so ransomware, as you guys probably know, is what folks like Michael and me and others in the cyber insurance community are talking about every day. And you talk about how the policies have evolved over time. As Michael was describing earlier with that liability concept, cyber insurance came out of professional liability in a way. So a lot of us, myself included, have a background in both cyber insurance as well as professional liability, particularly for technology companies. And you had that concept of perhaps software failing, and that leads to a security event. What does that look like? Over time, cyber insurance policies, with the help of the broader market, became much broader in scope in terms of what they cover. Fast forward to today, the most common threat vector, broadly speaking, being ransomware. So you get hit with ransomware and think about all of the different things that can implicate and the different costs associated with it. And a well-designed cyber insurance policy is going to address a lot of those. So there's going to be a front-end investigation where someone like Michael is going to coordinate with you to bring in a law firm, likely a forensics firm, potentially an additional forensics firm that is going to specifically work around ransom negotiation.
Mm-hmm.
Then there's also insurance coverage for the actual payment itself. There's then back end business interruption loss for, okay, we were down for 3 days and we lost X amount of revenue. And then the last item, which we sort of were alluding to earlier, having to do with a data recovery concept. If you had a full corruption of data and you lost certain important data sets, that needs to be rebuilt in some way, shape, or form. So all of those things right now are kind of the true spirit of a cyber insurance policy. And that's where insureds right now, I think, are generally glad that they have the policies because they seem to be working quite well, which is then presenting a new set of challenges for the insurance carriers that are providing the coverage, as the losses from ransomware have certainly increased over the past couple of years.
So I'm curious because you mentioned sort of the loss of business and stuff like that. And there was so much to unpack in what you were talking about. I think it hits on so many different things. But one, I was listening to our friends have over at Shift 5 have a podcast, and they were talking about a recent incident with a train line where they got hit with a cyber attack, and it basically shut down their ability to move and use their trains and transit. And I'm curious, like at that point, like, are you working with the other parts of the insurance, like that company, assuming they have a cyber insurance policy, there was certainly a cyber event, but it starts to have all this real physical world impact. Is it you guys 100% are on that, or are you also working in tandem with the other insurance company on some of the sort of ripple effects of that incident?
Yeah, I have a quick comment there, and then I think it'd be really helpful to hear Michael jump in from the claims perspective, because that's where folks like him really get involved. And so to your point, depending on the nature of the loss, sometimes there can be overlap and coordination between multiple insurance policies. I think what's interesting about the example you gave, and something Michael can touch on because it's a challenge in the market right now, is, so we talk about downtime. So that rail line, they can't operate. So now you start to get into essentially forensic accounting. And this also ties back to the property insurance market as well in terms of business interruption coverage. So you have, okay, the trigger might have been a cyber attack. So you look towards cyber insurance, and then you start getting into, because of it, we were down and could not operate for X number of days. Well, we typically generate Y amount of revenue over that period of time. So that does bring in some different and older insurance principles that the cyber market is now grappling with. And with that, I'll let Michael give a little more color around that.
Well, I mean, again, these are the hardest questions, which I appreciate. So the cyber, I'll speak broadly for the philosophy of the affirmative cyber market. We sell a product that is typically designed to respond as quote unquote primary for a cyber-based event. But as you've just described, events such as your rail line example, they may have other policies that consider themselves to be primary or substantially responsible for any loss that manifests itself in the physical world. And that gets into quite the exercise, to line up the language of the policies, to find out what the policyholder wants, what the insured wants, what did they expect, and how does it all line up to the four corners of these contracts that they've negotiated. It can be complicated. From our point of view at Resilience, we're trying to offer something more than just attention to the data breach element and the intangible risks that we've been discussing to help firms become more operationally resilient, both preventatively, proactively, and then in the event that they need to recover. So, certainly we want to get our shovels out and help firms get back up and running, and be service oriented. But when you're a buyer of insurance and you're thinking about this peril and how it can manifest in all these different ways, this gets back to my comment about the sort of standalone and affirmative market. You don't get all of those coverages that Kevin was outlining if you just bolt on a little bit of cyber onto your property policy. You do need to go to a specialty market, of which we are one, to get access to the data recovery coverage, a fulsome cyber extortion coverage, as well as these business interruption coverages. Otherwise, you might just get a little something that says, if you need a privacy lawyer to evaluate your data breach notice obligations, you might get coverage for that, but you wouldn't have everything. So, it's important to sort of grapple with that with a broker, typically, to figure out exactly what your perils are that you need insurance for.
Yeah, I guess
That's a really good
that's
point.
also one of the, sorry, just taking let's take a huge step back. What advice would you have for a company looking for insurance? What should I be concerned with as I enter into this? I think cyber is an area that, like, every company, regardless of what you do, it's actually a real risk. It's
and it's very different as well. There's
and it's very different by industry, and yeah. So it's like,
all
what
the
advice?
different types of attacks as well. You've got
Yeah.
so many different types. You've got service attacks that stops you from delivering business. You've got the likes of DDoS. You've got ransomware attacks that destroys your data. You've got data breach where your data gets stolen. There's so many different aspects here, and it can be very, depending on the company and business that they're offering, the impact can be very different. So to Mike's point is, if you're a company, what's an assessment look like to really determine what is the right kind of policy to get? And what's the types of requirements you would have to meet? Is it just filling in a form, or do I actually have to implement something? Is there some regulatory type of compliance I had to get to in order to become eligible?
Kevin, you want to take that one?
Yeah, I can jump in there. That is a good set of questions, and there's a lot there. So I guess I'll start with, if you're a company out there at this point, regardless of industry, because as we're all hitting on, unlike certain types of specialty insurance, cyber risk, cyber insurance is essentially industry agnostic. Everyone has the exposure in one way, shape, or form, given all the different types of attacks we just touched on. So first and foremost, typically a company is going to talk to their broker, ideally who can have some specialty and expertise in cyber insurance, because it is very much a niche product. And particularly compared to certain other lines of commercial insurance, cyber moves really fast and it changes, and there's a lack of standardization. So what one carrier says on their policy, or what they call a certain type of coverage, might vary from them to the next person. And not every policy is going to give all the same coverages. So first and foremost, you're going to be talking to your broker, ideally working with risk management, information security, finance, HR, legal, all these people that are different stakeholders at the insured. Talk to your broker, assess the risk, and then your broker is going to go out to markets like Resilience and others and try to procure different quotes. And this is where it gets interesting, because as you were saying, sort of what's required, what are we going to ask? And that is really interesting because, again, the market is moving fast. Mm-hmm. And as I alluded to earlier, and as Michael can attest, the loss environment has increased quite a bit, to put it simply, particularly around ransomware. And so just a few years ago, you might have been able to get a fairly robust product from a cyber insurance carrier by simply filling out a few page application, answering some relatively basic security questions. Initially, any underwriter is going to want to know, what do you do? What is your business? What industry are you in? And how big are you from a revenue standpoint? And then you sort of go downstream into, if you had any claims or cyber incidents before. And what I will say now, most importantly, is what security controls and risk management do you have in place? Fast forward to today's world now, where for a long time, carriers were adding more and more coverages to policies, which brokers and insurers were helping push. Now things are actually starting to almost go the other way. Certain of our competitors that have taken a lot of losses, they're now pulling back. They're adding co-insurance, they're adding sublimits and reducing the amount of coverage they're giving, particularly around ransomware. So you really do need to have your ducks in a row. And so at Resilience, what we're doing is we have experienced underwriters like myself who know the questions to ask around phishing cadence and patching protocols and endpoint detection and response tools and offline backups. We could go on and on. But when we're working with Michael from a claims leadership standpoint and security experts that we have in-house, because the insurance industry is kind of realizing this is a big ticket item. It's a big problem. And it seems like insurance professionals like myself and security professionals maybe can't solve it just by themselves. So you need to bring the two together, which is what we're attempting to do at Resilience. And that's where that much more robust assessment is coming in right now. And so we're looking at all kinds of different controls across the environment to see what insureds are doing, because that's going to dictate the outcome that they're going to get, how viable the coverage is, what it costs. And so that's what insurers and potential insureds need to be thinking about, is really being able to tell a good story about how they're managing the risk. And that's going to produce a better outcome on the insurance side.
Are you guys able to do any like, because I talked to another company a long time ago, actually not even a company, it was just some mathematicians that were like trying to build analytic models to try and assess risk and so on and so forth. And they had some interesting findings. And I'm curious, like questionnaires, like I fill out questionnaires all the time when I'm selling, like, you know, we have prospects that want us to make sure that they're, you know, we're doing this. And a lot of times those questionnaires, I promise there's a question coming. A lot of times those questionnaires have like antiquated, like check boxes I have to check. And I know if I don't check this box, it's going to get denied. But at the same time, I'm actually going well beyond what this questionnaire is asking me to do. I can think of any number of like sort of regulatory things that just can't keep pace with the ever-changing environment of technology and security and so on and so forth. So with that in mind, like how do you sort of capture, because I would imagine like if you just talk to the security team, if you just talk to the company and found out like what's their mentality towards security, you'd be like, oh, these guys know their shit and we're just gonna like, we feel pretty good about it, but there's no way that can come across I feel like there's no way to get that in a questionnaire. I'm curious, like how but there's probably some models, there's probably some things you can do that sort of tease that out of how a company operates. I'm just curious how you guys are sort of approaching it.
I guess my first question is, were you an underwriter before? Because you sound like one. I'm impressed. You know, I come from a world where I have historically managed books of business of large accounts, large companies, Fortune 1000 buying cyber. And to your exact point, all of us in the insurance world, we still get applications and questionnaires, a lot of which are yes, no every day. And that is part of the picture. But to your point, it is hard to tell a story and to glean any information that sort of falls into a gray area. Or can you elaborate on that just from a yes, no application? So you're spot on. Historically, I mentioned the larger accounts because those companies were more likely to have pre-COVID in-person underwriting meetings or over the past year or so, Zoom meetings, where folks like me were asking them lots of questions. They were giving presentations and you could get a bit more of a qualitative feel. So in addition to a bunch of yes, no answers, you could get that sense exactly like you described of, you know, this organization is impressive. They're really committed to security and risk management. Or perhaps they're not, and they're viewing this just as a financial instrument and some risk transfer, which is less of what you're looking for in the cyber insurance world. So that absolutely is a big part of it. As the scrutiny in underwriting has increased, given the threat vectors over the past couple of years, that has come more downstream where middle market organizations now are needing to do those calls and meetings and present a broader picture beyond what's on paper, because that does help everyone. It does help me as an underwriter, but it also helps the insured, again, tell their story, give more context around what they're doing, and ideally get a more optimized result. So that is certainly a big part of it. And then the other item you mentioned just about actuary and modeling the data, it's really interesting too, because again, compared to especially something like property insurance, which has been around for hundreds of years, cyber insurance, it's debatable, but it's really only been around in earnest for 10 to 15 years, realistically. And so with that, from an actuarial data standpoint, yes, we have some, but that is not a great amount.
15 years of data compared to hundreds of years worth of data?
Yeah, that hurts. and so with that, you know, again, if you think about resilience and what we're doing, what's a little more interesting, not being a traditional large insurance company, is, you know, we have a whole data science team in-house. So you're trying to bring all this together. We have a security team that can gather tons of data externally. You have underwriters who are getting data from applications and meetings. Then you have a data science team, and you're trying to leverage all that as best as possible. And you're trying to look at different items and track it and correlate it back to loss trends. Do you have an open RDP port? Does that make you more likely to have a ransomware event? More than likely, yes. Things like that. So we're trying our best with lots and lots of different data sources to paint a clearer picture, correlate that to actuarial data, and drive better results.
Which I imagine helps with scalability, right? I mean, like if every company needs to get cyber insurance, not every company can have a face-to-face or Zoom, like virtual meeting with their to go through that whole process, right? So
that's right.
So yeah.
So on that point, I think that's really interesting because it gets really, from a data analytics perspective, you'll have those companies who have met certain requirements and security controls that don't become victims, and you've got the other set who do become victims. Potentially, you could get to the point where you could actually use the data of those who are actually better protected in order to actually give suggestions to those who become victims of how to do it better. It's quite an interesting kind of aspect where you actually start looking at, since you're covering all of the models and doing those data analytics, it'd be quite interesting to offer recommendations for those to prevent themselves from becoming a victim. So it'll be interesting to see, how that, trending and predictability model will actually start picking up. So it's a really interesting aspect.
I think one of the challenges. I was just going to say, I think one of the challenges you guys probably face is that on the reporting side, there's probably only a small percentage of events that actually get reported in a way that you guys can actually use in an analytic model. My guess is there's a lot of events that happen where just you pay the guys off under the table, you do whatever you're going to do, and it's not really out there. I don't even, if I remember correctly, on the cyber side, there's only a handful of places where you actually have to report it. I think state of Maryland is one of the places, but there's it's very hard to get that reporting information, I imagine. Yeah.
I think it depends on the impact, really. If you're a victim of ransomware, it's going to be noisy. If you're basically data stolen, you might be trying to do it under the covers because there's not the visibility there. So it's interesting.
Yeah. So Joe's reading our VC deck, with respect to being able to take what we learn and use it to make superior recommendations. That's certainly true. I mean, at Resilience, and we're not... it's our thesis that you can't just look backward because technology is always changing. The cyber criminals are always changing their strategies, and also the law is changing. So, each state does have a data breach notice law, but it's very specific to social security numbers, driver's license numbers, personally identifiable information. If you want to get in and what you have to report, whether to the attorney general or to the impacted individuals, doesn't go into a cause of loss analysis. What was the intrusion pathway? What security did you have that didn't work, or which employee clicked the link they shouldn't have clicked?
So that was my next question.
So it's hard for us, and in our claims investigation, we want to be comprehensive, but also user friendly, right? We policyholders want to know that they're getting a recovery out of their insurance and not necessarily an audit out of it. So, for me, one of my challenges in my role, and again, no one needs to weep for the insurance lawyer, but is to get enough information to help educate my underwriters so that way they are selecting risks appropriately, pricing them appropriately, and we're managing those risks appropriately before anything bad happens.
As an industry, are you guys collaborating? You all have the same problem. Are you guys trying to work together to create some sort of one-stop, collaborating in any way to sort of share this information in useful ways, not in blamey kind of ways?
I'll take that one first, and then I'll kick it to Kevin. So, the history of Lloyd's of London is a coffee shop. It's a gossip, it's a gossip-filled atrium in central London. But at the same time, we're all competitors. So, and claims data is the data that we've invested the most money in, because it's not just the investments on the underwriting and analytical side, but then it's the money out the door and our losses. And so sharing data in the insurance market has always been both quite common and also fraught with competitive peril. We also work with insurers and reinsurers who, of course, each of them aggregates data that they receive from other insurance players that they may insure or reinsure or support in some other way, as do the brokers. So we all have great data sets, or we all think we have one. We each think ours is a little better than the next. At Resilience, we are quite supportive of efforts to increase data sharing, especially around ransomware, which, as Joe was describing, too often exists in a shroud of mystery, isn't reported to law enforcement, or has a stigma around it, such that firms just want to sweep it under the rug and not discuss it. If we're gonna bend the curve on that trend line, we need more information. So that's my take on it, Kevin.
No, I would just echo a lot of what you said. I don't have a whole lot else new to add there. I think there are a lot of conversations happening at very high levels. I mean, you even start to think about government implications, especially around ransomware, in terms of, yes, can there be more information sharing to solve the problem? And then you juxtapose that against the fact that it is a for-profit industry in a very competitive environment. And carriers that have big data sets and lots of claims information, they're trying to leverage that themselves to produce better results for them as a company. So it is an interesting situation because, as Michael alluded to, there are dozens of different carriers that have data sets. There are brokers that have their own data sets based on who their clients are. And then what's really interesting, particularly with ransomware, is now some of the forensics vendors and some of the vendors that are doing ransomware negotiation, they've got their own interesting data sets because they're getting pulled into lots of different ransomware incidents, regardless of who the insurance carrier might be, if there is one, or who the insurance broker is, or what industry they're in. So there's lots of different competing data that we're all sort of trying to leverage. And the last thing I'd mention, going back a bit to the prior topic and tying it together, is, Joe, to your point, it does speak to cyber insurance in particular being different than some other lines, whereby we're trying to understand, okay, here's an assessment of your risk, and here's maybe a couple key controls that you don't have in place. So there are lines there where we at Resilience, we might say, right now, you're not in the right position for us to insure you if you're really lacking a lot of maturity. But there's definitely a middle ground, which is different than other lines, where we're trying to really partner together and bring a lot of resources and value to the table, in addition to financial risk transfer, and say, we really recommend you implement X, Y, and Z from a controls perspective. And you're even now starting to see in the market, there are different levers you can pull. Because again, we all know, broadly speaking, depending on your risk profile, it's going to affect the limit and the price that you get. But there's even more specific targeted tweaks. Like if you implement multi-factor authentication for admin accounts, perhaps this sublimit for a ransomware loss will go away. So you're seeing more things like that, where particularly at Resilience, with the different teams we have in-house, we're trying to drive behavioral change.
Yep.
Is training?
I was going to say, I have a question. Just this is probably more for Michael. When it gets into, so when you get into the claims process, one of the things I'm really interested in, and this goes back to the experience I have in the maritime side. One of the things that they always wanted to do was find human fault, because if they find a human at fault, then their processes and their reliability favors the company. Versus if they find, like, it was, let's say, a maintenance issue that they didn't, check the engine, and that was an issue, then that changes the liability. So one of the things I've started seeing when we hear about data breaches and security incidents in the cyberspace, I've started seeing the same trend. I've started looking for human fault, because if you find a human fault, then it means that your compliance or your policies or your procedures are not, they weren't the cause of it. It was a human who clicked in a link. It was a human who abused their access. So are we seeing the same kind of trend in cyber when it comes down to, and does that change the liability, whether it was a failure in the IT not deploying multi-factor authentication or a human clicking in a link? Is there a difference between liability when you get into the claim side?
Sure. Well, that's a great question, and I think it's too early to tell. Most data breach litigation resolves at a settlement, and it resolves at a settlement fairly early on in the pace of litigation. So typically, there's a dispute as to standing, Article 3 standing. It's, are you even really harmed? Okay, yes, there was a data breach, but and your social security number may be out, but have you been the victim of any identity theft? Is it just a fear that one day something might happen to you? How certain are you even that any of your personal data was truly lost? So that's sort of the first question of most data breach litigation, especially, of course, on the personally identifiable information side. A lot of cases can be resolved right there. A judge in many circuits, the judge comes to the decision that, well, no, you don't have a concrete harm under the Article 3, so this case is over. If the judge doesn't make that ruling, right, then the case is, of course, going to continue to more fact-based inquiries and discovery around what the harm looks like, who's been harmed, how much have they been harmed, what was the cause, and where was the negligence or the breach of contractual duty. And there, I think that your hypothesis makes a lot of sense. If you're a business and you're being sued for being the victim of a data breach or some other security event, you might like to say, look, we had all the people, processes, and technology in place, but still Jimmy in the mailroom can't be stopped. He's going to click. He can't stop clicking that link. He's going to do it every time. And what do you want me to do? Fire Jimmy? I can't do that. So I think that's that hypothesis does make some sense, and I'm sure that there are some litigators who would say, we're going to position this as a human error, an unfortunate, and it is oftentimes truly. But I don't think I can say with confidence yet that the cases are really turning as a valuation perspective on that.
Okay.
And one final thing, which is I get this a lot from the claims investigation side, which is the coverage question. Am I going to pay this claim on the other end of on the other side of it? Am I looking to find out that the IT leader, didn't configure something properly, or they didn't deploy technology that might have come up during the underwriting process? And that's not how cyber claims work. The coverage is not designed to say only a sophisticated cyber criminal led data breach deploying technologies that heretofore were for the National Security Agency. That's the only scenario we're going to cover. No, the triggers are usually quite broader than that, and encompass all forms of human error, whether it's IT, legal, or, a misplaced briefcase used to be the most popular cyber claim.
A laptop in a taxi at the airport.
Exactly, that's right.
So I think that Michael leads into your question from the awareness side, from the people perspective. How do you quantify that side?
Yeah, I mean, I guess getting into sort of training and things like that, right? Get back to Jimmy in the mailroom, right? If you don't have some sort of security awareness training, doesn't that put you at greater risk potentially? I don't know. I go back and forth on how effective security awareness training is, because you can't be vigilant all the time. But certainly doing some things, I think it's more about training for reporting than it is training for not clicking the link. What do you do if you do this thing? Not punish people. Don't fire Jimmy because he keeps clicking the link. Make sure that if he clicks the link, he tells somebody, I clicked
nothing happens.
Right, exactly. Or even better, put systems in place to prevent, where he just sees a web page that says you clicked a really questionable link. Do you want to continue? Those types of things. So yeah, I'm just curious, where does training fit in? Is that one of those recommendations that you would make? What other sort of recommendations, just, without getting into too much detail, would you say, what other, sort of advice would you have for companies to sort of reduce their risk when that you guys are looking at?
Sure. I mean, I can chime in from the underwriting side. I mean, you're absolutely right. And especially thinking about the lens of ransomware and kind of the chain of how it happens and the kill chain and correlating that against controls, that first line of defense, and often, unfortunately, the weakest link is the human error concept, which isn't just about, I have this security tool, so I'm not worried about it. It doesn't work that way. So yes, as underwriters, myself, others at Resilience, and others at other carriers are certainly asking about security awareness training. And that kind of goes back to that qualitative conversation earlier of what's your culture around, in this case, security awareness, or more broadly, risk management. And we certainly ask questions around phishing testing in particular, because we're trying to tie it back to threat vectors, right? So we know we're seeing lots of losses because Jimmy in the mailroom clicked the link for the 7th time. So we're asking, how often are you doing phishing testing? Ideally more often. And then are you tracking click rates? What does that look like? Are they going down? Because do you have follow-up training, as you alluded to, if you do click it? And really trying to get through to people. So that is kind of the big area around security awareness training. Again, specifically the phishing testing, and trying to just reduce the likelihood of that occurring. And then from there, you do sort of start to transition back to the technical security side. Because then you start to think about, well, I can do so much, but what if someone like Jimmy still does click? So then you get into items like web content filtering, and you start to think about, well, do you have multi-factor authentication in place for access to email or your Office 365 environment? Or do people have admin credentials on their workstations? And trying to limit the damage that can be done if someone does click on the link.
Right. Yep. I sort of feel remiss if I didn't at least Cybrary, right? We're a cybersecurity career development platform. We have a lot of training that's really geared toward, it's not security awareness training. It's geared towards the cybersecurity professional, trying to keep them up to date. Are those the types of programs you also are looking for within? And I'm not fishing. I'm just curious if that's if that's something else that sort of plays a role when you're talking to these organizations about their general culture towards security, having these sort of programs and making those types of investments in their security team.
Yeah, I'll take that one. And the answer is yes. And so for traditional cyber insurers, and I'll differentiate us from traditional, we have done a poor job of pushing that kind of education and of assessing the in-house security apparatus, if you will. Despite some efforts, to promote, hey, this is a great resource, this is a great program, this is a great platform for you to develop and continue to mature your organization. Traditionally, there are a couple touch points where we can influence the insured client to improve themselves. One is in the underwriting process when Kevin is talking to them and asking all these questions and saying, hey, have you thought about Cybrary? Have you thought about this tool? Have you thought about this training? And for us at Resilience, we're trying to really invest also after that transaction has to happen. And that's another time when we sit down and we say, hey, we've assessed you at all these different ways with our scans, our technology, our data modeling, and also through assessment of your security team. And we want to put in front of them tools and educational materials that help them become better. But historically, cyber insurers have had a real tough time with that because we're always talking to the insurance people at an organization. So we're really interested in breaking down those silos. So that way the CFO is buying a cyber insurance policy that is empowering the security team at the organization and not one that the security team doesn't know how it works. And then when the crisis happens, there's this moment of friction. We want that to be ironed out.
So that's actually interesting. So if I could, so one of the things that I struggle with, right, as head of security here at Cybrary, right, is trying to make some business cases for some of the things that we want to do, right? We're deploying DLP. Now, how do it's hard for me in my seat to actually quantify what value I can put on something like data loss prevention. Like I can try and do my best, but I just don't have access to all of the data or all of the information. Would the opportunity for me to talk to some, you guys or a broker or somebody to help me to get our company to understand, okay, business if we do this, right, to help me build that business case with our CFO. It's not that our business is against it. It's just that you have to be able to quantify that risk and you have to be able to quantify it in a way that you then know how much to invest in it. Is this the type of, is that like a partnership that you guys can see between the security team and the insurer?
Mm-hmm.
Yes. I mean, we have that problem too. Insurance has that problem too, because if you don't have a claim that year, then you say, what was my return on investment? But of course, and so we're always coming to bat to say, look, this is what could happen. And so for us at Resilience, when we partner with a client or a broker, we're trying to lay out as best we can from our data sets and our claims experience, this is what it really could look like. So we try to present a series of peer events. They didn't have DLP on this one, and really dollar for dollar, this is exactly what happened. And this is a near competitor, a similar sector, similar peer. So that way you can steer that conversation and be empowered to make the best case for that investment.
It reminds me of a case because I did the pen test in a power station 5 years ago now. And it was always the one experience that kind of changed my perspective on my job and actually what I'm doing. And it got down to, it was the CFO and CEO who really turned around. They changed the whole perspective, because when we were doing security, it was all about fear and risk and putting it into, if you don't do this, this is the bad things that could potentially happen. And that was not something that they really could quantify. And it was the CFO, actually, interesting CFO said, what is our cyber gap? What is the cost of our business not operating per day or per hour? And if we don't do this, what is the risk? What's the gap? What's the cost of that? And it was interesting because this is really where I'm curious for both Michael and Kevin, is that who you're speaking to in the board the most often, who's the people that you're actually interacting with? Is it the CISO or head of security? Because the ones that I find it was the CFO and the risk officer. It was their safety officer. It was all about, really, they were the ones that made the decision. And when they looked at insurance, they said they're willing to spend around 10% of that potential cost, maybe depending if it was $1 million or 2 million, but if it was even up to 100 million, if they were even exposed of a financial risk of 100 million, they would even be interested in increasing that even 20% to offset the risk. So I'm just curious, kind of where your perspective, who are you speaking to in the organizations, and how are you actually doing that? Because it's all about risk, and it's about the cost of doing nothing and the cost of doing something, and how much you're willing to spend to make sure that cost of doing nothing doesn't happen.
Yeah, I mean, I'll speak to it from the underwriting side, and it's a great question, and it's actually something I feel really positive about, because over the last few years, it's been one of the best changes I've seen in cyber insurance. Because if you go back 5-6 years, even cyber insurance, it was still a little bit newer and younger. Even then, the take-up rate was lower. And to your point, back then it was still an insurance policy, and so it fell under the purview of risk management, finance. So it was CFOs, treasurers, risk managers, and then folks like me might ask them some security questions. They might go try and find someone internally who they thought knew the answer. And at the end of the day, there was a disconnect there because you weren't always speaking the same language. And one of the really interesting challenges, as cyber insurance was newer and maybe the loss environment wasn't as severe, there were certain IT and IS professionals who would sort of get a little defensive and not like the idea of cyber insurance because they were saying, well, look, we have this great security operation. We have really good controls. We have the best firewalls, et cetera. And over time, I think the broader insurance community, with the help of insureds, was able to break down some of those barriers and hesitations. And now, as I said, I've been on underwriting meetings and calls weekly for a few years now with lots of different organizations of different sizes and industries. And very often we are now talking to the CISOs, which is great because, like you guys, they have that expertise even more than someone like me does, and they can answer the questions and they're buying into it from a risk management perspective. So the philosophy of managing risk and then how that correlates to insurance is there. So certainly the CFOs and the risk managers, legal departments, they're all still involved because they should be with insurance, but it's been a really great and positive and productive transition where CISOs in particular have gotten much more involved. And now, it goes back to data. We're getting better data because before, if you ask a risk manager to fill out a questionnaire about cybersecurity, that's sort of a tough ask. Yes. And then tying it back to underwriting and results, perhaps you're now relying on answers that aren't even correct. So that's been a big improvement, I would say.
Yeah, I imagine like that partnership. I mean, I look at it, it's a very positive thing. I look at it as I have a budget. I have to spend it in the right places. I need to assess my risk, and knowing where I need to invest is important, and knowing where cyber insurance covers and what it doesn't cover and how I can reduce that cost of the cyber insurance or doing whatever. Like it all ties together and lets me know, like, yes, this investment in DLP is the right investment as opposed to maybe investing in some other security apparatus or whatever process or technology that maybe, I'd love to do that, but there's only so much that I can do. I have a small team, I have a small budget. And so I think looking at it from that perspective of how does insurance augment my ability to spread my technology and my resources, to be most effective, I think is the best way to look at it. And I'm glad that that's sort of the shift that's happening.
That's positive.
Yep.
And, nothing brings friends together like a crisis. And unfortunately, the losses are more severe. So where once cybersecurity professionals and cyber insurance professionals might say, what is this? Or these guys are getting in my way, or they're intervening in my plan and program. Now we're all incentivized to really address what is a much more comprehensive problem than it was 5-10 years ago, where, Kevin was really just focused on, are your payment cards secure? The target breach is right here. I need to know those payment cards are secure. But now it's operational. It is, it's privacy, it's data protection, it's the health of the enterprise. So it's, we all have an incentive to get this right.
So a question on that: how early in the process, let's say a company does, become a victim of a security incident, how early in the process do they get you involved? Because from my experience is that, it's a complete organization response. It's you've got the legal response, you've got incident responders, you've got third party, assistance coming in, you've got digital forensics, you might have a PR communications handling, kind of outbound media requests and journalists, you might have press statements ready, you might be basically working with law enforcement from those perspectives. Where do you fit in the kind of incident response kind of area? And do you help coordinate any of that at all, or is it something you just mostly focus around the claim itself? So how much involved are you in that incident response piece?
Sure. So for us, and from what I'd say is probably most leading markets, we want to meet our clients where they are, but we're ready to help quarterback from the outset. So at Resilience, we maintain an in-house response emergency hotline and a network of partners. I will say generally for cybersecurity professionals who may be listening, a lot of cyber insurance policies are prescriptive about the service providers that are used, whether that's the law firm, the technical forensic firm, the communications firm, et cetera. So my recommendation always is to notice your insurance relationships as soon as possible, even if you believe you've got it under control, even if you understand your policy to be more flexible, because you always want to preserve the maximum amount of rights. That's the insurance in me, the insurance lawyer in me. But for us, it's extraordinarily important to be empowering the incident response from the get-go, be able to offer sort of the benefit of our expertise. I've worked on thousands of events, obviously not with the cybersecurity expertise that a lot of my clients will have in-house, but as a sort of cross-section of that expertise with the lawyers as well. So being able to sort of flag some tripwires.
Because the quicker you respond, the cheaper, the less financial impact it has on you. And time in responding to this is so critical. So I've got another question related. So this is something I've really changed. A few years ago, I did an incident response. And are you starting to see even fraudulent claims at all in cyber area as well? Because I dealt with, there was an interesting case a few years ago. I on occasion, I'm a certain expertise and I get called by certain governments and they say, well, I work in these forensics cases. And it was a particular case, and this one kind of led me to Ukraine. And it was a height of ransomware cases. And doing the digital forensics, when we're looking at basically the case itself, it didn't follow the normal kind of steps and evidence gathering that you would typically find in all the other cases that I'd dealt with. So we decided to look into a bit more detail, and we started kind of uncovering things that just didn't feel that this was a typical case. Ultimately, it led to that the company themselves actually infected themselves with ransomware, and they were hiding a financial crime. And if they were able to get through the claims process, they were going to get money from the government as a victim of a ransomware case. So it was a kind of interesting case, and really changed my outset is that, that nothing is always as it seems. And it really changed my kind of perspective on ransomware cases. So are you starting to see cases like that where people, might want to cover other crimes? And ransomware is the best thing. It destroys all evidence. It destroys everything. It's a very destructive piece of software. And it gives companies an opportunity to hide other types of crimes under the kind of realm of ransomware. Are you starting to see any types of those cases, or is that something that's
well, Joseph, don't inspire anybody to.
I'm not.
Joe just picked up on that's my exit strategy. Thanks for spoiling it.
Boom! I'm out of here. I'm on an island in Cayman Islands. So as a general matter, cyber insurance has had a very low rate of fraud. And one reason, insurance fraud, although we're always vigilant, especially claims lawyers like me, we can suss that stuff out. But, and part of that is by using these third-party vendors who are very experienced. CrowdStrike is going to find it, and they're going to tell us, they're not beholden to the insured who's doing it all in-house and saying
independence
exclusively. Yeah. Hey, look, here's the only evidence I've got, and it points way away from where the true, where the fraud lies. I have seen a couple of instances, either in the ransomware context or in social engineering, where they were essentially, I got phished. I wired, $1 million out to this, this bank account. Sure enough, it was their own bank account. That has happened on a rare occasion, and always, we've caught them all. But as a general matter, we're fortunate to have insureds who don't pursue that route.
That's good. It's something that, it was, I've seen it in certain places being on the increase, but it's not so common. It's just something kind of, I think, as we see this being a vector of increase, that we just have to be, having the right tools and right people that have that independence in place, that have ability to do the digital forensics without, influence of whoever they're doing it for. So.
I think that's probably a great place to sort of wrap things up. I know, Joe, you have a hard stop, and I appreciate our guests coming on. Maybe we can have you come back and talk some more, because I think this is a topic that
I've got five more questions. So I think this is kind of I'm really interested in the future side of things. I'm interested in what next, and I guess we can get into. We should do this as another episode as well, and get into a lot of the kind of the direction. But even one thing, as I've talked in the past about the P&L approach of cyber insurance, where it's the collective, the economy is sharing. And I'm just interested, that's something you're going down the path of seeing. It's where multiple companies come together, and it's no longer just an offset of risk. It actually becomes an investment. It's something that basically multiple companies will invest into. And if you don't have a claims in a year or two, whatever it might be, you'll get reward payback from that P&L kind of a type of insurance pool. Is this a kind of something that, I've seen it in other types of industries where you get there's no claims and it's an investment, you get a profit back as a result of, the money that's going in there. And you'll have enough pool as well in that collective, investment to the companies that do become victims, that there's enough to actually offset that risk. Is that something we're seeing kind of moving towards, the economy of sharing of insurance, I guess?
Kevin, do you want to take it, or do you want me to take a swing at it?
You can take a swing at it.
All right. Well, so I don't think I've seen much move towards mutualization on cyber insurance risk. That said, at Resilience, we have a security credit program where we basically do similar to what you described. If they don't have a claim, and they want to steer sort of that savings into an additional cybersecurity investment, we want to support it too. So we put some of our what do you say? We put our skin in the game. We put our skin in the game too.
Right. Anyway, incentivization for the good behavior, right?
Yeah, correct. That's the idea, is that, for doing the right things, you actually get incentivized for doing it. Right. It becomes actually, it becomes an easier business case and justification, just like what Mike was saying, is that, here's the money back at the end of the year to actually invest in new security solutions that will actually help you offset the risk and get a better insurance policy.
I think it would be great to wrap it up, and love to have you guys come back and talk some more.
Absolutely. This has been interesting. For me, it's really educating, because it's something I've been involved in since 2008, when, the whole maritime and shipping thing. And it's been really interesting to see how the progress, because I've been involved in numerous conversations over the year, and it's great listening to that, we've moved along. And I think the audience are, if they're interested in getting an idea, I guess, reach out to your website and check in Resilience to see, what cyber insurance possibilities they have. So, but basically, it's been a pleasure having you on the show. For the audience, stay safe. Make sure you offset your risk. Make sure that whatever you do, that you do the right things. You do the basic hygiene. You offset your risk. And if you do become a victim, that you can recover. You have the ability. You have people out there who you can connect with and get back to operational business as quick as possible. Because that's ultimately, the more resilient you are, the quicker you can get back to operations, the less financial impact you have to your organization. That's ultimately our goal, is to make sure your businesses stay safe out there. So it's a pleasure having the guests on the show, Kevin, Michael, awesome. Mike G, always, it's great having the chat with you, and really looking forward to more. And for the audience, tune in to 401 Access tonight every 2 weeks. And if you listen to this episode and you haven't listened to previous ones, definitely go back and subscribe and listen to the episodes every 2 weeks. We'll have new conversations, new guests, and stay safe. And we look forward to speaking to you, and you listen to the episode again. So thank you. All the best. Take care.